This is Your Business Incorporated with me, Bosin Omofaye. On today's program, Kenya's forecast 15% jump in 2018 tourism sector revenue as oil prices raised above $86 a barrel. And Nigeria's Custom Street loses retired, long-serving stock exchange chief executive. And that's where we start off today's program. Nigeria's Custom Street, the home to Nigeria's Stock Exchange, remembers Hayford Alile, a former Director General of the Stock Exchange who died on October the 3rd. Alile led the Nigerian Stock Exchange as the Chief Executive from 1976 to 1999, which was a period of transformation, the privatization, and the closure of banks, new listings as the early years of the CSES, including the automation of the Nigerian Stock Exchange. The late Alile was also a corporate chieftain of several companies and worked also at the central bank before joining the Nigerian Stock Exchange. Let's go straight to the market, and starting from here, where the market is about 0.1% up intraday this Thursday. The South African index, however, was about 0.5% down. Lunchtime, Nigeria is the same story in Egypt, North Africa, where the K30 lost a whopping 1.63% about midday Nigerian time. The Kenyan market declined 0.11% on Wednesday, a bit of a topsy-turvy from the emerging market route there for some of the frontier markets on the African continent. Now in the Middle East, it's a mixed bag of numbers. Intraday Thursday, the Abu Dhabi market index was up 0.12%. The Dubai financial market was almost 1% lower intraday. The Qatar market was 0.13% in the positive territory, and the Saudi Tadawul index 0.27% negative. Saudi Arabia is facing a number of economic issues. Its non-oil sector was down in the last quarter. Let's cross over to Europe, where we're checking through with the markets trading a little bit lower today. Investors digesting comments from the U.S. Federal Reserve Chief and monitor the event in Italy as far as the budget was concerned. So let's cross over to the Frankfurt Stock Exchange, where my colleague Paul Christian Breeze is standing by for of DWTV for Channels Television to take us through today's trading day. Paul, it's good to see you. Let's start with the events yesterday evening. Britain exit from the European Union is looming. Even the more cautious voices have started to pitch in on this very important milestone. Meantime, the PM, Theresa May, is trying to push through her plans, and that is having some effect in the business sector, in particular automobile.
Yes, that's right, and the UK does need the automotive sector. However, the automotive sector isn't quite sure right now whether it really needs the UK. So there's 850,000 jobs in the UK in this sector, so a lot of jobs that could potentially be lost. 1.6 million cars are produced in the country, but a lot of them aren't sold in the country. They're shipped off to Europe, as the UK is seen as a central access point to the European Union, which could be lost. And the way these cars are produced is important because they're produced just in time. That means pieces will arrive only shortly before they're needed to assemble a car. They may go back and forth between the mainland and the island several times in between. So apart from the cost, it could also delay production and disturb this very delicate just-in-time system. So much so that Toyota CEO said that if there would be any disruption, we'd have to close our plant temporarily to make alternative arrangements. Toyota sells 90% of its UK-made cars to the European market. BMW also said it would service one of its plants starting April 1st. That's the first day, of course, after the official Brexit of the UK from Europe. And it said it would be ready to shift its production to Netherlands should that have to be made, should these arrangements have to be made in a case of a no-deal Brexit. The British market might just be too small for these companies to stay. Now, Nissan has also joined the chorus. It has a huge plant in Sunderland with 7,000 people, and the historic irony of this is that Sunderland is one of the areas where people voted for a Brexit 2 years ago. Now their jobs may be lost due to it.
Okay. Let's step into the markets, as it were. I'm looking at the U.S. 10-year now selling at a 3.197. This sell-off on U.S. government bonds starts on Wednesday, spreading to Asia and Europe. We see a lot of uptick right now on yield across a number of bonds, including Japan 10-year. So what does it mean? What is happening? What does it mean for the equities and the emerging markets?
So what triggered the sell-off was better than expected data in the U.S. From the service sector, and also remarks by Jerome Powell on the good state of the U.S. economy, and that sparked speculation about faster interest rate hikes, and this confidence in the U.S. economy got people to sell off their bonds. Not only in the U.S., but then also spreading to Asia and Europe. As you said, they're leaving this safe haven in the U.S. With these rising borrowing costs, however, that is a problem for emerging markets, because it usually means that investors will pull out their money of emerging markets and put them in the U.S., where they can get returns for less risky investments. The yen was hit particularly hard today, even though the stock exchange is closed for a holiday. The Indian rupee and the Indonesian rupiah hit record lows again after already being hit in the last couple of days. So not good news for emerging markets here.
Yes, but if we step into the world of social media and technology, Facebook, how much problem does Facebook face? It looks like something big, a big hammer, is in the offing of a data breach that affected about 50 million people.
Yes, Facebook made this public last week that about 50 million people were affected by a data breach in its system through the option of viewing page as a visitor. Now Ireland is looking into whether the company has acted according to new regulations in Europe protecting customer data. The company could face potentially a fine of 1.6 billion euros, or 4% of its global turnover. Now, we don't know yet if this is going to happen, but if Ireland finds that the company did something wrong, it could potentially slap this fine. A lot of questions are still open about this data breach. Because under this new regulation, the company has to disclaim the attack within 72 hours. So we still don't know who attacked the company or where this attack came from. You know, did it come from Russia, from China? Was it within the country? Nobody really knows. And it is also yet unclear whether this data breach allowed hackers to also access other apps or sites where you use Facebook as a login to these services. So that's also still unclear. Facebook is, of course, facing this year a lot of problems with data protection, especially after it became clear earlier this year that with Cambridge Analytica, it had used data, or a third service had used data from customers in order to influence the elections in the U.S.
Okay, let's hang it in there for today. Tomorrow is Friday. Let's get together then once again. Paul Christian Breeze from Frankfurt Stock